Welcome to QLM Business News. Let's take a look at today's latest updates. Trump tariffs trigger U.S. bond sell-off, government debt yields hit 4.5%. U.S. government debt has taken a hit as investors dumped bonds in reaction to President Donald Trump's latest tariff measures. Following the imposition of a sweeping 104% tariff on Chinese imports and escalating trade tensions with Beijing, bond yields on U.S. government debt, particularly for 10-year maturities, spiked from 3.9% to 4.5%, the highest level seen since February. This sudden increase has shaken confidence in U.S. Treasuries, traditionally viewed as a safe haven for investors. The sell-off comes amid fears that Trump's aggressive tariff policies, including new 25% duties on car parts and other goods, could further drive up consumer prices and undermine economic growth. As bond prices fell and yields surged, experts warned that the rising cost of borrowing could hurt companies and government spending alike. Laith Khalaf, head of investment analysis at A.J. Bell, noted that rising bond yields translate to higher borrowing costs for both businesses and governments. Mohamed Elirian, chief economic advisor at Allianz, attributed the bond market's downturn to an erosion of confidence in U.S. assets, compounded by tariffs that risk spurring inflation. Some analysts have speculated that if market turbulence continues, the U.S. Federal Reserve might have to step in with emergency bond purchases, akin to the Bank of England's intervention in 2022 following Liz Truss's mini-budget. The repercussions of Trump's tariff strategy extend beyond the U.S. Economists have warned that even a modest tariff impact, estimated at around 0.2% of GDP, could reduce economic growth by 1% in the worst-case scenario. Additionally, the volatility in the U.S. bond market has begun to affect international markets. Rising UK bond yields, for instance, could increase borrowing costs for companies and households in Britain. The current uncertainty is compounded by conflicting signals from the U.S. political arena. While Treasury Secretary Scott Bessent claims that Trump's goal is to revive the American dream by boosting jobs and manufacturing, critics argue that the heightened trade war risks long-term economic stability. With speculation that even foreign holders, like China, which owns roughly $759 billion in U.S. bonds, might be offloading their holdings, the stakes are high. As global markets react to these shifts, many warn that ultimately, the global economy could be the biggest loser in this escalating trade conflict. Brought to you by QLM Business News, your trusted digital media source. Stay informed at qlmbusinessnews.com and connect with us on Facebook, X, and YouTube. Help us deliver more news stories by liking, sharing, and subscribing today.